Good morning and welcome to the Minervini Private Access Trading Room. I'm Bob Weissman. If we could do a quick hand raise, letting me know that you're hearing me loud and clear as we get started here. Hope everybody had a good weekend and better than me watch my Eagles lose again.
Started.
And let's
The
welcome.
Bears weren't exactly a fun thing to watch either.
Let's watch Mark Ritchie with his nationally televised Bears getting creamed yesterday.
It was rough.
Do a hand check, please. Just let us know you're hearing Mark Ritchie and seeing hands going up. And then finally, Mark Minervini. And Mark, take it away.
Hello. Okay, everyone. I got a lot to cover today and expect a couple rants because there's a few things that I want to go over. I don't even know where to start sometimes. But let me just start off by saying CELH is acting really well here. So I really like the way this is breaking out. I apologize. I'm trying to go so quick with putting in my own orders. And sometimes, I punch in and I hit the wrong symbols. And I think most of you knew the symbol that I meant when I put out, I guess, what was it? CEPH, maybe I said. So that was obviously a mistake, but it was CELH. So far, this is really doing quite well here. I like the way this is coming out here. Up almost 8% on the day. So that's great. On the other side, on the flip, on the flip side, we have this GDYN, which it started to come out and then it squatted. So I was figuring, I'm buying it close to the danger point. If it doesn't go and it reverses, then you've got an outside day. Unfortunately, I got one email. Okay, Bob got an email and he immediately forwarded it to me because we have the session coming up. He wanted to know if I should address this, and somebody who was outraged with the fact that how could I possibly sell a stock right after I just bought it. Obviously a complete misunderstanding of what maybe we do here. I don't really know how that, how we can even get that comment. If anybody has read my books and understands what we're doing here. Number one, okay, I want to make sure everybody understands. First of all, the whole idea is to get stopped out as soon as you can. I would much rather get stopped out. And again, just, by saying, being stopped out so quickly is the issue. I could see somebody upset that we lost money on the trade. By the way, I lost money on the trade. I got hosed. Okay. I took a big loss, probably bigger than anybody here. So I lost money on the trade. But besides that, would it have been better if we got stopped out a week later or a month later? I mean, no, if we lost 5% or 8% or whatever the number is, or whatever you lost 1,000, 5,000, 10,000, is it better off if it happens, a month from now? No, actually it's worse because not only did we lose the money, but we lost the time as well. So the whole idea is to trade. That was this trade, was to trade it as it squatted back as close to the danger point as possible. So then if the stock came off, you'd get the outside day and that's completely abnormal. We got to get out right now. Now, if you're going, I just want to point out, if you're new at this and you're going into this with these rose-colored glasses that you think everything's going to work out and you're never going to have losses, your trading's not for you. This is not what the game you should be in. This is not the business you should be in. And managing risk happens in real time. There is no predetermined minimum hold time that we're going to say, oh, we're going to hold this for a week. No, if it hits the stop, it hits the stop. If it's not acting right, then we're getting out before it hits the stop. That's the whole idea, is to try to ascertain if the stock is acting normal or not acting normal. So now let me just point something out here. Why do we do this? Well, I don't know. Let's look at this. Maybe this is the reason. We also got stopped on this very quickly too, right? So not the same exact day, but right after the buy. Well, this was abnormal. See, this outside day. Now, this could have happened that day. We don't know. We don't know if this outside day is going to turn into a 20% decline on the day. Every 20% decline starts as a 5% decline. Every 50% decline starts as a 20% decline. So we've got to treat every abnormal action as something that's going to be potentially a major action, a major problem. So here's Snap. And by the way, every single analyst had a buy rating on Snap, which that got me nervous in the first place, but that's the last thing I want to see. Everybody had a buy rating. Everybody had numbers, targets much higher. So nobody was giving negative statements about Snap at this point. Let's see what else. Oh, okay. So then another thing, from the same individual, and if you're here and I'm talking to you, I apologize. I'm certainly not mentioning your name, but I do want to have, for everybody's edification, to be able to address these things. Now, I want to also point out that there's so many of you that are doing tremendous, and we get so many emails, and I see you in the U.S. Investing Championship. Those of you that have been competing, we've dominated the leaders list for years and years now. Winners have been our members and students. So, I don't want to. I don't want to not acknowledge that. However, I am this person who thinks, I actually don't think I can save everybody, but I try to save everybody. Let's just put it that way. And I know some people are like, oh, well, just ignore the few people, ignore the people on Twitter, the trolls, ignore the people that don't get it right and don't do it well. See, to me, those are the people that need the help. Those are the people, I'm not writing books, and I didn't write a mindset book for champion athletes that are already got gold medals. I wrote it for the people who can't do that or have not been able to do that and want to do that. I wrote my books for people that are having trouble trading and need to learn how to trade so they can do better. If you're already doing great, you don't need me, right? So that's why I do respond to everybody. Anyway, let's see what else. Let's put out another stock here. If you remember this, remember LE, Land's End? So we bought it right here. 2 days later, it comes in. That's completely abnormal, right? We're out. We're gone. This is why we do that. Okay, because I don't have a crystal ball. If I had a crystal ball, then I'd be worth $100 billion. If I had liquidity, I'd be worth $1 billion. I don't have a crystal ball and I don't have liquidity. So I can only scale. A lot of people say, why aren't you a billionaire if you get all these big returns? Because I don't have the liquidity. I can only ratchet this system up so big. Now, I've run 50 million in this system at times, and that was the most that I really could move around in this system. I've had, when I was in New York City, I had people coming to me wanting to give me $500 million, money firms that wanted to put $500 million in my hands. I had to say no. I had the integrity to say no. Some people might have taken it and just, taken the fees. I said, no, I can't run $500 million in this strategy. That's not what it's designed for. So anyway, I just wanted to start off with that, with a reality check here. All right. We stop out when the stock hits the stop. All right. And I'm sorry if we stop out 15 times in a row, then the market's not good. Not to mention, I want to preface this with something else too. You're supposed to be trading small right now. All right. If you're not doing, and even if we were on buy signals and I'm saying green lights everywhere, the suggestion is, or my advice is that if you're not having traction in your own portfolio, if you're not working with gains, you shouldn't be trading large anyway. So it shouldn't be much of a big deal if you're getting stopped out. You see, if you stick to the rules, you're not going to have this emotional pressure. If you have emotional pressure, you got to take some responsibility and realize that most of the time you're creating all the pressure. You're creating the pressure. You're fighting with the market. You're arguing with the market. You're trading large when you shouldn't be trading large. If you're getting whipped around, you got to pull back. People say, well, I did progressive exposure and then I ratcheted it up and then things turned back down. And then I ratcheted it down and things turned back up. Okay, so that you're in the whipsaw market. You just got your answer. Your answer is to stop trading, trade small. It's not working. You're in a back and forth market. So progressive exposure, yes, is going to be a liability at that time. You're going to get stopped. You're going to get whipped in and out. That's the whole idea. That's the most dangerous environment. Back and forth markets are the dangerous environment. It's not that the techniques don't work. It's you don't know how to use them, because there's thousands of people around the world, many of them right on display in the U.S. Investing Championship, using it impeccably and getting phenomenal returns. Mark Ritchie is one of them. And I'm going to ask you, Mark Ritchie, in just a minute about this. Mark Ritchie has been, with very little drawdown for a decade, getting gigantic returns. And he does it with a pretty large amount of money. He's also managing money on top of it. So, but you see, he's been disciplined all year long. He's been playing it real tight, real safe. He doesn't care that the Dow's hitting new highs. He doesn't care that somebody else is up big. He doesn't care that I'm up big. We talk every day. You think he would throw in the towel and say, "Oh, Minervini's killing it. I'm going to just go and I'm going to do what he's doing. I'm going to take this short-term trade." Nope. Nope. He made a plan. He's sticking with it. And I applaud him for that. And he'll have his big year. He had his big year last year. I mean, I had a big year too, but he had a way bigger year than me. He was up 3 times what I was up. So this year I'm up, whatever. I'm up over him. I'm up probably, 10 times what he's up. So that's okay, right? At the end of 5 years, 10 years, we're both going to have gigantic performance, and we're both going to get there through incredible discipline. That's the key. Let's talk about a few names here. So let's see this. Oh, so this ESTC, I'm sure we're going to get questions on this one. So this is a slingshot play. This is a very rare play. I don't do this often, but there's again, there's some smart people I know that like this company along with CELH. And with this, you break out here and then you see you come off and it looks like it's failed, and then it just comes ripping back. This is the slingshot effect. You got 1, 2, 3, 4, 5, I don't know, maybe 8 days straight up. Now you get this pullback. Now, if this truly is under this accumulation, that this real strength here, and it's so as strong as it appears, this pullback should be very short-lived, and we should just move back into new high ground. So, and this actually is really strong. When you get this right, it could be a really, really strong price pattern. So the key is, though, you want to take it from a very low risk entry, because you're usually playing these. They're compressed up the right side. They run up. They're somewhat extended. So if it doesn't work, it could come in. You can get a pretty good loss pretty quickly, just like, well, any of these can do that. But so I'm just doing this from a very, very tight, a couple percent, few percent. If it doesn't work, then it's not. There's no big loss here. But I'm just trying to time it perfectly here. So that's that one. Let's see what else. This NDLS I like, but it's going into earnings, and this is one where you got to be a little more careful. This is an American Express. American Express and any stock can go down, but American Express, had a history of hardly reacting to earnings. I love the fundamentals behind it. The financials are doing well. The group's doing really well. Whole bunch of reasons why I went into earnings with American Express. With something like this, yes, it could take off and be up huge on the day on the earnings, but it could also get torpedoed. So I'd have to be at a profit. This is one where, we can buy if it comes out here and go into earnings only if you had a decent profit. Goodyear's going into earnings tomorrow. Now up about 4% here. I think if we just closed up 4%, I think that's enough to go into earnings with Goodyear. So I'd be going into earnings with Goodyear.
Just Mark, jump in. Goodyear is Friday morning.
Oh, I'm sorry. Why did I think it was tomorrow? I thought
it's scheduled, the post scheduled says tomorrow morning, but it's not gonna be
okay. Well, that's even better. We've got more days to hopefully get at even a bigger profit and go into earnings. What's that?
Keep going. Go ahead.
Yeah. So, and again, so let's just say, maybe this runs up ahead of earnings and it discounts it, good reports coming out and it's up 10, 12%. So now you've got the option where if you want, you can sell some of it and you can finance the stop. You maybe sell half of it and go into the earnings. And now you've got some real cushion there, even though you got a profit cushion, but you nail some of that profit down. SHOO is acting pretty well. Add it to that. This is acting really nice here. So some of these are acting well. I think, if we hold up today, would probably move to green on the STEM model, because we're starting to see some traction, a few double-digit gains here, and I think this is where we can say, okay, things are starting to work here. Even though we've got a few that are whipping us around from time to time, that's going to happen. 50% of your stocks are going to stop you out. Are you making money on balance? Are the winners outpacing the losers? And how is it happening? How are you getting to that? Is it happening in a normal fashion where you get some stocks stop you out, but you've got the other ones are confirming and you're seeing that kind of traction? Or is it really a market where just, nothing's working and you're on balance, you're losing money, even though maybe it's 50-50, but on balance, the winners aren't outpacing the losers. We're starting to see that now. Mark, what are you seeing as far as, because you've been, I mean, you've been diligently watching this with your finger on the pulse, and occasionally you've moved up and then only to go right back into cash or a very defensive position. Are you seeing what I'm seeing here, where we're starting to improve here to the point at which you're willing to start getting a little more aggressive?
Yeah, a little bit. I would say, maybe less than what I would normally do, just because, looking for even further signs of confirmation. But yeah, and we have more names. You notice, like even doing the weekend work, there were a few more groups. A retail looks pretty good, which is a group I tend to favor a little more, because that's where sometimes you get some of those growth winners. I would definitely say it looks good. I also, I think we've been talking about this whole small cap. If this breaks out, well, it looks like the Russell might be making the turn here. That's a great sign. So, yes is the short answer, but the pedal is by no means, to the floor yet.
Right. I want to point out something else too, just to show you that if you happen to be watching these sessions every week, you're already in an elite group as far as I'm concerned, because we only have about 20% of the membership that watch these sessions live in any one week. And then even subsequent to that on replays, it's like another 20 or 30%. So 50% of the membership doesn't even watch the study sessions. Okay. And then they wonder why they're not doing well. All right. Or maybe they're doing so well they don't need to, but I doubt that. I highly doubt that. So again, most people don't want to do the work. You understand? And if you're doing the work and you're watching the study sessions and you're committing to this for a year or two, and you're really in there, analyzing your results, doing the post analysis, and having realistic expectations, you're going to do well. You're going to do well because you're in process and you're sticking with it and you're learning something, and you understand that it's not going to happen overnight. So again, I just I always want to try to keep you guys grounded, and to understand that this isn't the stock market is not a get rich quick scheme. And if you do get rich quick, it usually gets evaporated, because whatever gets you there is the exact thing that takes it away. If you get there through volatility takes it away. You always got to guard whatever gets you there. That's what you have to be on guard for, even with stops. Tight stops. If that's what gets you successful, that's what will unravel you, because those tight stops, you'll get into a market where you get a whole bunch of stops and you'll get death by 1,000 cuts. Whatever gets you there, that's also the devil. That's got it's a two-sided coin always. You got to remember that. So I want to keep you guys grounded. I want to keep you guys, confident, and keep you in here so you can learn and you can get to the other side. Let's see, what else? I'm trying to see if we got any other stocks to talk about here. Energy, DEN is acting really well here. I wanted to own Oxy. I really wanted to own Oxy, and it just came out here, and I was afraid it was going to gap, but it gapped, and now it's gone. So I'm not chasing it, but this is one that I definitely want to own. I wanted to own it down here from a cheap, but it was a little sloppy, and it just ran up the right side. And this is a perfect example how you see here. Let me show you how you can lose money correctly, okay, and make money incorrectly. All right. And you want to lose correctly. You don't want to make money incorrectly, because eventually doing it incorrectly will blow you up. So I get in here and I get stopped out of this trade, right? This is perfect. This is absolutely perfect setup. But I got stopped. It didn't work. So I look back, okay, I mean, maybe I could have just reduced and not, got out of the whole position. Fine. Even then, I would have been stopped over here. Either way, this was turning out to be, from this point, was going to be a losing trade, break-even trade at best. Now over here, it's sloppy, right? I don't enter. And it turns out to be, it would have been a winner if I just broke my rules and didn't stick, look for a nice tight entry point. Okay, fine. That happens all the time. But this is not, again, you have to have that discipline. This is a perfect example where you see my discipline right in chronological order here. Now, of course, I'm looking for another entry point on this, but still didn't find it, didn't get it here. So I stay away. I look for something else. Wait for this stock. Maybe it's going to set up another time, but it's not time to buy it from me. Let me just scan a little bit more here, see if there's anything else to talk about. I don't think so as far as the stocks are concerned. We talked about ESTC. Okay, let's take some questions.
Yep.
And again, no, let me just like actually, yeah, let's take some questions. Go ahead.
Okay,
Sorry.
you're on a roll. I don't want to interrupt.
I know.
Yeah,
I was
don't
gonna ask Mark Ritchie something, but let's take some questions first.
All right. Sean is asking if, or you mentioned relative symmetry in the past video. It's the first time he's picked up on that phrase, mind defining that a little, or give some, do you mind defining that, or give a little, give some current examples, maybe a midweek discussion on that topic?
It's really just, it's a very abstract concept and complicated concept, not to understand intelligently, but to really understand how it works. I'm not going to get into that now. It's just too big of a subject, and it's something that it can really get you off track, because again, like I said, it's very subjective and it's hard to interpret. I was going to put it in my book and I decided not to, again, for the reasons I just said, because it's not something that we can really quantify enough. It's just not quantifiable enough. I've shared it with some people in the industry and they thought it was genius of what, of what I've observed, but as much as it may be a great observation, it's not. We're talking about relative symmetry. We just can't quantify it enough to make it systematic or make it into a methodology. So to me, if you can't quantify it, it's kind of worthless, in a strategy.
Josh is asking on CELH, you had to stop showing 90-70, and he was wondering if you could explain how you came up with that number versus 91.70 would be just below the low of 10 of yesterday's low.
Very simply, it's just a maximum percentage. It's about an 8% stop. I don't want to go bigger than that. That's really the outside. So again, if you're going to use the low here, well, that that is too big of a percentage. So I'm going to have to go with a mathematical stop. So if you go with a technical stop, you've got to back into the risk. So you say, okay, well, I'm going to sell it if it goes below these lows. That's where technically the chart sours. But those lows are 15% away from your purchase price. You can't use that. That's too much. I mean, maybe you can use that if your average gain is 40%, but I still wouldn't use that. I don't go, see, once you go above 9%, the math starts working against you. A 10% loss takes an 11% gain to get even. 20% takes a 25, 50% takes 100% gain to get even. So exponentially, it gets tougher and tougher against you. So the math starts turning against you once you get above that 8%. There's a reason why we use these numbers. They're not just pulled out of a hat. William O'Neill didn't pull 7-8% out of a hat. I didn't pull these numbers out of a hat. These are numbers for reasons of risk reward. They're also numbers where you should be able to get it right with that type of leeway. Say, an 8% max stop. If you can't get it right with an 8% stop, your timing is way off. You have to work on your timing, not change your stop. See, so I mean, if you told me that I can only trade with a 2% stop for the rest of my life, I can never have a stop bigger than 2%. I'd still make money. I'd still do just as well. All I would do is just back into trades that were tighter trades. And I would use, I'd be in and out a lot more. I'd have more turnover, and I would adjust for that. I would adjust for that in ways of, through risk reward, through adjusting my, my plays and my progressive exposure and how aggressive I get at certain times, and my risk. I would just adjust for that difference. So again, it's your timing you have to work on, your selection, your timing, your management of the trade, not the amount of stop you're using. All right. The amount of stop you're using is basically a selection tool. This is what people don't understand. Your stop is what makes you select the stocks. See, when I say I want a 2% stop, if I'm getting my head caved in over here and I'm losing, and I say, you know what? I'm not using any more than a 2% stop. What does that mean? That means I have to now find stocks that have super tight entries. So the stop is determining what stocks I select. All right. That's called backing into risk. This is what a lot of people don't understand. They think, oh, I'm getting stopped out at 8%. I got to give it more room. If I gave it to 12%, I'd still be in. No, yes, you would be probably on that trade and maybe some trades. And then eventually you blow yourself up when you get a string of losses because of risk of ruin. Okay. So again, things aren't always what they appear. Okay. I learned that through my recent CNBC appearance, that people sometimes, will judge something on what it appears when it's not always what it appears. So anyway, that's a whole nother story. Go ahead. Next question.
Okay.
We're not even going there right now.
Michael is asking if you could just share some rules of thumb that you use in taking profits during your shorter term scalping trading.
Yeah, I mean, I'm really just, again, it's real risk reward. It's just if I go in and I'm risking $5,000, if I'm up $20,000, I got a 4R. I mean, as soon as I get where the stock, the trade is profitable at a couple times my risk, I'm selling some stock. I mean, I'm just playing the risk reward relationship. That's it. It's no different. Again, it's the same thing. I mean, CELH here, this is, I took a huge position in this, and I already sold some. I already financed my risk. I already sold some right into this little rally here. So again, now I'm holding some, but again, I'm just constantly keeping myself buoyant. There is no magic. I mean, I sell stocks all the time and they go way higher. I don't care. I don't care about that, because in my little world, if let me show you something here. So let's just say this trade right here, right? So I go into it, right? And right here, this low, we're going to use as the stop, right? Okay. I'm going into it with that stop. Okay. So now I come up here and I draw this little box. Okay. I operate in this little box right here, meaning that, see this low? Okay, when I get at a ratio that's higher, that I'm making money against that stop, it makes mathematical sense to sell. If you can do that over and over, you're going to make money. It's just a matter of how many times can you do it. That's the key. So I'm always trying to, and I'm going to be on IBD Live on Wednesday, and we're going to be talking about this. We're going to be talking about risk reward and how what I do is I basically, when things aren't working well and I can't get those gains for the swing or the larger moves, this box might be like this. I'm expecting this box, right? Okay, let's just say here's the stop. So now this box is going to be bigger, right? The upside, I need to pay for this risk. Well, okay, so things aren't working very well and I'm not getting that upside. So what I do is I make the box smaller. Watch. Oops, sorry. I make the box smaller. It's that simple. Now here's the nice thing about this. Here's the hidden value. Now that I've made my stop smaller, I'm making money even if I take a little gain, right? Because I'm the ratio. However, I'm still in a position for the bigger move. I'm still in position for the upside of the box. See, I still have the top of the box, but I cut off the bottom, right? And now that works. Just that little box works. But I also put myself in a position. Let's say I get lucky today and this stock just boom, blasts right off. It's up 10%. Okay, I've got options now. All right. And now not only can I make a great rip against my risk and sell some of that, but I'm in a great position now. I can backstop. Maybe I backstop it at 5%, but it doesn't come back and never hits that stop. And now I get a big move out of that. It opens up my options. You understand? Mark, you obviously are a master at this, certainly have gotten this down really well, of thinking this way. What do you say to someone who, or how do we get someone who doesn't really quite understand this or understands it intellectually, but then gets emotional? And when, you're getting hit by a bunch of, losses, or you get like today, stock breaks out, boom, turns around, stops you out, gets flustered over that. How do we make this math and these methods come into your trading and get you disciplined, where you get rid of that emotion, you get rid of all that stuff that, is holding you back? Or how did you do it? Let's put it that way. How did
Oh,
you
man.
do it?
I was like, yeah, I was just like, okay, you've written a couple books on this and people still aren't getting it right.
Well, yeah,
Well,
it's not easy.
no, it's not, and I think some of this is it's against a little bit against human nature. Certainly, maybe against your initial emotions. Okay, nobody likes to lose money, but it's funny, I think you and I think about this very differently. If we're going to lose money, we'd much rather do it fast.
Absolutely.
I'd rather know I'm wrong in a minute than an hour or certainly a week. There's an old saying in trading: your best loss is your first loss. Well, in this style, it's your best loss is your quickest loss.
Same
Um,
same loss.
Right.
Same loss. If it's a month from now, I got the same loss, except I lost a month where I could have redeployed the money.
Exactly right. But I think a lot of amateurs or new people don't understand that. One, they don't have the confidence that they're just hoping if I wait a month, maybe my loss will turn into a gain, or I don't know. You know what I mean? Rather than they don't see time the way I think, um, maybe we do. But I would say there's nothing like doing something properly a time or two. When you sort of have that aha moment. Bob refers to some of these as golden nuggets or whatever, but when you put them into practice, then, I've made this point on the whole progressive exposure a bunch of times. Once you start to understand how it works and you get yourself properly positioned and things work, you go, okay, it's worth getting chopped around 4 or 5 times to get it right once. But you've got to go through that. This is the part where every trader's got to go through that part alone. Mark can sit here in the cockpit with you and tell you how to do it, but at some point, there's part of this that you've got to figure out as you go through it.
In my mindset book, I quote Bob Rotella, who wrote a book, How Champions Think, and he has been big with golfers. And he said, if you are one that doesn't want a 3-putt, and your goal is to avoid 3-putting, you're never going to ever be a great 1-putter. You're never going to be a birdie. You're never going to putt for birdie. He said, you better love 1-putting more than you hate 3-putting. This is exactly what's happening here. If you're upset over losses, you see, you're missing the whole point. You better learn to love losses. See, I love losses as long as they're small and they're quick. I love losses. I've learned to completely change my perspective on losses. I used to hate losses, and I tried to avoid them at all costs. Worst thing you can do. Then all you do is get angry. You get angry. What happens when something that you don't want happens over and over, right? You get upset over it. You get emotional. You have to embrace it and realize that that's part of it, and then learn how to tame it and how to live with it and make it serve you. That's the whole idea. These losses have to serve you. And I could tell you right now, by missing snaps decline of 25%, that served me quite well, and it also serves me when I get out in one day, as opposed to getting out in 2 months from now when I lose. And now I've lost all that time. So again, part of the business, and people, I think, just come in here and just, they got these unrealistic expectations that you can't get angry over losing money in the stock market. You're never going to do well if you're getting angry and emotional over losses. They're part of the business, and they happen half the time. Just as much as you win, you're going to lose. So just think about that. If something that happens just as much as the good side, and you're going to get upset over it, how could you possibly ever have any longevity? How could you last? You can't. It's impossible. You have to embrace it. Let's get some more questions.
Yep. Question on FWRG. If that would be something you would still look at as a developing of a primary base, or would the activity from October 4th there be negating any interest in this?
The October 4th. Wait a minute, October 4th.
Yeah, the big reversal work there.
Right here. Oh, no, not at all. That's one day. I mean, this is a primary base. If this tightened up right here and came out, yeah. I mean, this is, if you right here, look, just draw a line. Again, I got to move this damn Zoom thing. It always blocks my. So let's say we set up right here. Let's just do a little imagination. I always do this. I always play this little game where I draw in what I would like to see optimally. Okay, what I would like to see, how I would like to see this develop optimally. So this would be nice right here. Okay, so there you go. Right, this is what I want to see. Maybe even a little shakeout here. I mean, I'd really like to see it actually shake out. You actually want me to draw it completely optimal? Here's what I'd really like to see. Sure, what I optimally I'd like to see. Okay, so a little shakeout over there. Now, what did I just do? Hold on a second. I want to show you. Why is this more optimal than what I just did? What did I just do? Mark Ritchie, what did I just do?
You rinsed out the weak hands.
Right. Through what? Through VCP. You see, all I did was make a little mini VCP, right? That's all I did. So that's what I want to see. I want to see it go through a normal changing of hands from weak hands to strong hands. I want to get, all I did was just draw the towel, wringing out the water that I talked about, getting out the supply. So having this shakeout is important. It doesn't have to happen that way, but optimally, if I want this to really set up absolutely perfect for an explosive move, the more I can get tightenings and the more I can get little shakeouts and I get fractals where that VCP characteristic happens not only on the bigger picture, but also on the smaller picture. And if you really want to take this to the next level, you look at these just maybe a couple days and look at an intraday, and that would be forming a VCP. Now that's what we call overlapping, time frame alignment. So now you get all these time frames, and then if you got that set up like that, and again, I'm just blocking my screen here, that's when you can get an absolutely explosive move out of here. Okay, so I think of trading like this. I think and this is how, when I first started, I was poor. I had no money. And it was like that little bit of money that I had, I felt like that was my big opportunity. That was my one shot on the Johnny Carson show. That was my, my one chance to make it big. If I blew it, that was it. So I just waited for perfect setups. I mean, I would wait and wait and wait that, like I've tweeted sometimes, or I've shown a picture of a cat, like a big tigers in the woods, just waiting to pounce on that lame, that lame animal that's got a hurt leg. And, and then when there's virtually no chance of failure, boom. And a lion or a cheetah will sit in the woods for days, starving, and not make that move, because they know if they make that move and they run after that antelope or that animal that isn't a high probability, they're gonna burn themselves out. They're gonna use that energy. They instinctively know that the energy that they only have so much energy, and they're already starving. They're hungry, so they can't burn that energy up, and then they won't be strong enough to go after the one that is the high probability, right? It's the same thing as trading. If you don't go after the low probability setups and you go in there and you're sloppy, what energy do you blow? Capital. You blow your money. Now, when you get the good setups, you don't have the capital to take advantage of them or to make. It's the exact same thing. It's like the law of nature, right? Does this make sense now? Are some light bulbs going off? So this is what I would want to see here optimally. So now, again, if you draw a line across that pivot right here, volume comes in. Now it tells you that supply is really diminished, right? Well, we don't know if there's some big seller out there lurking, but we get a good idea that the supply has stopped coming to market. Now, as you draw this line, when it gets through that point, look, it's cleared pretty much everything. It hasn't even closed ever above that level. There's been no close. So if you break out and can close above that level, that would be the first time that you closed above that level. That's the first thing you want to look for. That's the first confirmation. But you're clearing out all that supply. And there's not much supply. The thing's only been trading for, I don't know, 20 days or so, or at this time, when it sets up. So there's not a whole lot of supply to begin with, and it hasn't made a big decline. Let's measure the decline. So from here, so it's about 20%. So from here, from the high to where the pivot is, it's about 10% off the high. See, it's 1 day off 10%. So how much supply could be there, right? Not a whole lot of supply. It just didn't trade there long enough. So that's the analysis of that. And I just gave you a golden analysis that you can make a career on what I just showed you. There's a career on that alone right there. I've made an entire career out of what I just showed you, and Mark Ritchie is making an entire career out of it as well. Am I wrong, Mark?
Nope. This is
You have an entire career based on this.
yeah. Well, I would say the rants are the best part of the service, but because some of these questions, once you learn all this stuff, it becomes a little bit second nature. But then just reinforcing these things psychologically. Yeah, I just see this intuitively. It just becomes a part of the way you look at things.
Right.
I was going to jump in there with the opportunity to just describe, if you like, any part of this last few minute session. It's just a tip of the iceberg what we go through at the Master Trader program for those
7
of you who
days
have been
of
there and know this. But this is exactly why the distinction of how deep the analysis gets there is where you have the time to go through that type of stuff is just what Mark created the Master Trader program for. That's the purpose of it.
Yeah. The whole idea is to go through the whole thing, read the books 10 times each, commit to a year or two on here, go through the Master Trader program at least once, make an investment for God's sakes. You go to college for 4 years, 8 years, spend hundreds of thousands of dollars to come out and have a meaningless paying job. And I don't want it to mean anybody's job. When I say meaningless, I mean financially, relatively speaking. But then again, someone thinks they're going to spend $5,000 and magically be a great trader in a couple months. Come on. It's ridiculous, man. It's ridiculous. Let's get with reality here.
Joseph had a quick follow-up with that CELH where you're drawing the box example. His question was, when your stock gets up to that point that you can de-risk the trade to make it risk-free trade, do you sell off your profit enough to make it a riskless trade at that point? Is that your
Okay,
normal
that's a
process?
great question. That's a great question. So that's someone who I see is really understanding it. So let's just say that your stop can be 10%, right? And if you have a 1/10 of that move on the upside and you sold 90% of your position, you would finance your stop. Now, if you have a move on the upside that's equal to your stop, you could sell half of it. So see, that's how the math works. You can make that decision. You have got to make that decision. I don't know what your plan is. There's like no right or wrong way to do it. It's whatever way you do well and manage. And there's going to be, a trade-off. There's some strategies are going to take lots of turnover. It also depends on the market you're in. What's the theme? What's working? So there's a lot of, there's a lot of intangible things that you have to, and a lot of things that are subjective. That's why this is an art. This is an art. I'm giving you an incredible amount of science. There's not too many, there's not too many people out there that have done this type of work, in-depth, comprehensive, that have quantified this, the technical analysis. I'm not talking about quantifying it with, spreadsheets and indicators and algorithms. I'm talking about quantifying the optics of this, quantifying the side of the skill side of it, and really bringing it to where we can get as many tools as we have from a strategy, a methodology, and a mechanical from a mechanical standpoint. And then from there, there's still an art that has to be applied, but it's like giving you the best paints, the best canvas, all the best tools, or all the best, let's say that's probably not the best example, all the best tools. You got the best drill, ladders, and everything that a contractor needs. That's great. You got all the equipment. Does that mean you could go build a house? Does that mean you could build a nice structure? Of course not. You got to learn how to use all that stuff. And the more tools you bring in, the more complex it gets. And the bigger the structure and the more elaborate that you want, the thing that you want to accomplish, the more it's going to take. The more it's going to take to learn, the more it's going to take to have skill and to be able to do that. It's just no different. It's no different. This is a business just like any other business. Don't think it's any different, and don't underestimate it, because it's harder than almost any other business out there. It's harder than becoming a doctor. A surgery is way more quantifiable than this. Okay, that's why doctors don't go in and open your brain and just go, you know what, I think I'll do this. There's a whole entire thing laid out. There's protocol for everything. That's mechanical, quantifiable. There's still skill involved, but there's a lot more is quantifiable. Even being an attorney, you're going by the letter of the law. This here is, you've got to get that type of education where you understand, just like poker, you got to understand the probabilities, you've got to understand risk management, all that, but you still, it's a game of skill. It's the same thing with this. There's still the skill trumps everything. You've got to learn how to use those tools, and it takes time. Like I say all the time, if I went to McDonald's right now, you put me in McDonald's, said, hey, run the joint, I wouldn't know what to do. I wouldn't know how to turn the fry machine on. Does that mean I'm stupid? No, it means I'm ignorant. I haven't learned yet. And that's something that's pretty basic. And I can tell you right now, it'd probably take me at least a year to even learn how to be an assistant manager of a McDonald's. But of course, we should be trading and getting super performance at 100% on our money, in a few months after we take Minervini Private Access.
Joseph actually did come to the Master Trader program last year and is still looking to come back again this year. Quick question.
We've got people that have come 7 years in a row. 7 years in a row. That's commitment. That's commitment. All right. And that's what it took. There's some people that came, it took them 5 years before they got it. And then they turn out to be great traders. We've got traders that are incredibly accomplished. It took them 5 years. It took me 6 years before I was even profitable. I didn't have a Master Trader program. I didn't have a Minervini Private Access. I didn't have a mentor to scream and yell at me every week and tell me what I was doing wrong.
Muhammad wanted to look at TDC and see if this, why this wasn't viable for being on Buy Alert this week.
I'm not, I mean, it's okay. I think it's fine. It's, I did see it, and I saw it in previous weeks too. Why did I stay away from it? I don't know. It is wedging up a bit. If you take a look here, it's just sort of been just wedging its way up. I think it can work as a trade. But it just as David Ryan would say, it just didn't have the look. Bottom line is I have the last say here. Mark Ritchie also put stocks on Buy Alert. He's probably, 10% or 5% of the names that I are on Buy Alert. He puts a couple. That's just because also we have overlap. I mean, pretty much everything that I find, he's finding as well. But we find some stocks, some names that each other we don't find. And then also I look at the your guys' list on the Simple Dropbox, and sometimes I find a name or two there that I didn't see in my work. So again, I have to make a cutoff at some point, and this one just to me didn't have the look.
On a similar,
but it is a VCP. It's a VCP, and Friday was the entry point. You could have easily made a case to buy it on Friday. Absolutely broke out. You've got the volume. It's all there.
similar kind of question. Ross is asking about RVLV. If this is considered too wedging up, is essentially his question. He's also trying to understand what would be the proper entry point for this.
No, this looks fine. I mean, you could have entered it, last week right here. I was thinking of buying it there, but then I just wanted it to tighten up. I wanted to complete the space out a little bit better. This right here, we got this decline, this big decline here. So I thought, maybe there's some supply here and we're not going to just come right out. And I think so far that's been a good guess. And now if we can build this handle right here, see again, let's move this up where this pivot's being built. Now, what happens if we tighten up here? Okay, we tighten up right here. Let's say we tighten up for a few days. The volume comes way in. Supply starts coming to market, right? We get a good indication of that. This stock breaks out here. What happens now? What did that just accomplish? Mark Ritchie, what did that just accomplish?
Same thing we talked about before. Just, shook out those last few weak hands and, sort of changed hands one more time, one more tightening.
Now, I want to just show you, and this isn't to say anything bad about Mark Ritchie. So now Mark's been doing this for how long? My style, Mark, 11 years now, 12 years, 11, 12 years. He has gotten incredible returns. He's incredibly accomplished, but he gave me the wrong answer. I did this. And the reason why I'm going to say that, he knows, as soon as I said he knows he's going to know the answer. But my point is that I don't care how much you think you've got this. You don't have this. Okay. If you've been doing it for a year, you don't know shit. You don't know nothing. All right. Even 5 years, you don't know much. I've been doing this for almost 40, and I'm still learning. The answer is we clear out all the supply. Gone. All the supply is gone. See, this is where it declined from. This is where, look at this sell-off. Pow, right? That's where there's a seller. There was a big seller there. There's definitely a big seller there. This didn't happen for Mount Betty. There's a big seller right here. So what we want, the reason why I didn't buy it here was because I saw there's a big seller right here, and I didn't want to buy right into that supply. Now, that might be eliminated. That seller might be gone. We don't know that. And you want to take a shot here, fine. All right. And you put your stop. I decided not to. Because you know why? I don't give a crap if it takes off and I miss it. I don't care. All right. Now, if you're the one that's in a Monday morning quarterback, then I guess you got to buy it here because you're going to be all upset if it takes off and you didn't buy it. Well, that's not me. All right. I want to see it come up, set up here. I want to see it calm down and give me an indication that this seller is gone. And then I want to see it clear out all the supply. And that's going to give me another indication. And that's still no guarantee, but it's going to add the probabilities. I just gave you another multi-million-dollar lesson. There's a career in what I just gave you, a career in that alone.
I'm wondering how many people like I did 15 years ago would be asking, well, who is that seller, Mark?
How long, Bob, how many years did I tell you about the concept of determining supply coming to market, and how long did it take you before you understood it?
Oh yeah. It was at least 3-4 years, and I'm next to the guy every single day. All
right
day.
Next to me every single day, and he could not get, he couldn't really get this concept to work it into his trading. Now, I've gotten a lot better at explaining these things, and we've got a lot more tools, and we've got more of a systematic approach because I've been teaching now for a decade. You know, when Bob was first with Bob has been with me, just so you guys don't know, for 17 years. Bob has been with me for 17 years, side by side. Okay. He knows me better than anybody on the face of the planet. All right. So again, 17 years ago, I wasn't teaching. I didn't have books, and I wasn't teaching and didn't have a program. So over the years, you know, I've gotten better at explaining these things and coming up with examples and being able to teach it, which, you know, to your benefit, of course. Okay. So that's how I'm looking to handle this. I am looking to buy this, but it has to set up. It has to set up. I like the name. Just want the screen here. I'm trying to get, because I'm having a problem. Hold on one second. RVLV. I was trying to get it to come up on my other screen, and I was having an issue. Okay, there we go. Yeah, I like the name. All right, and it does have earnings though coming out pretty soon, right, Bob? Doesn't this one have earnings maybe in a week or two?
Let me just verify.
We're in earnings season too, so we've got to also be careful here. A lot of stocks you get blindsided, but we're in, you know, we're going into a lot of earnings, huh?
Next Wednesday after.
Next Wednesday, so we have some time. So that depends if it sets up into earnings or not. How close to earnings? But if you look at the fundamentals on this, we got nice margins, little expansion recently, big earnings in the last couple of quarters, actually 3 quarters, 4 quarters going back, triple digit earnings every quarter. Sales have just accelerated from negative sales, minus 5%, minus 2%, 2 quarters ago to 22%, 1 quarter ago, and this last quarter up 60%. So you've got acceleration. This is hitting on all cylinders, but it's okay. It's not price ready. Right? You could have the right stock, but not price ready. I'm always waiting for a stock to be price ready. Doesn't matter what the fundamentals are. I mean, there's stocks that I absolutely love that I want to be in. I know the story. I know what's going on. I know there's great things going on. AFRM is one that I've been dying to own. I can't get on board. It just doesn't set up. That's my discipline. You see, I've been doing this for almost 4 decades, and I still will not trust my opinion or my fundamental analysis, even if I know it inside out, and I'll watch the stock double and triple and won't get involved if it doesn't meet my criteria. That's the discipline. That's the love. That's why I'm who I am. That's why I have the performance I have. That's why I'm here 40 years later. There's a reason for that. It's not by chance.
And speaking of earnings, a couple of questions I see for earnings that are tomorrow after the close. Guys, we will post that tomorrow morning for COF and Boyd, but we don't So some of the questions are being asked, Mark, how we handle these two names going into earnings tomorrow after the close.
Okay, I'm sorry, but I was looking at this and it got distracted. You're gonna have to repeat it. But first of all, I just want to say, how much does this have to go down before all my stop is actually a good move? Right? It was a crappy move earlier, right? This is down 20% today. I'm a hero all of a sudden, right? All of a sudden, it was a great stop. See, that right there, that thinking is what was totally flawed, right? The result should not justify the means. If this stock went up from here and turned around and doubled, I would feel equally confident that what I did was correct. It doesn't matter. Now, if it comes off and great, that would be great if, I avoided that. But that's where you've got to be very careful about trying to let the result justify the means. If this went up, well, I should have held it. No, the stock wasn't acting right. It wasn't acting right. It doesn't guarantee that it's going to sell off here, but it definitely raises the probability, and we're dealing with probabilities. Now we're below the 50-day. Now you've got a gigantic outside day here. Look at the volume. The volume is already over average, and we're at 12:30 in the afternoon, and we're already above average volume. Not a good sign. Not a good sign. I just wanted to point that out.
Yeah, the question just of some people asking about the earnings tomorrow after the close, which we'll post in the morning tomorrow, but asking how you are likely to handle stocks with earnings going into tomorrow, BYD, COF.
BYD, COF. So that now BYD after the close?
Both of them are.
Right. So we'll see tomorrow. I'm going to see what happens tomorrow. Maybe tomorrow, throughout the day, BYD is up 8%. Well, that changes the whole landscape of how I might go into earnings now. I might have a nice little profit there and maybe be up 9 or 10%. Now, let's say stock sells off and I'm off 4 or 5%. Well, now it's a different story. Now I probably sell it before earnings, because what if it gaps now and I get another 10% gap on top of my already 4 or 5%? Now I'm down 15, 16, 17%. So I got to do the math. I got to see where I am at that point. I'm making decisions to hold into earnings literally 5 minutes before the close, that's when I make the decision. Sometimes 15 minutes before the close, unless there's ominous action throughout the day and I don't want to lose any more. The stock's, going against me, or maybe the stock's up big and I want to take some off and finance my risk. So I take a little off to cushion it. But I'm making those decisions right before, right to the last minute, because I want to give the stock a chance to show me the money, Jerry. Show me the money.
Also seeing some encouraging comments is from people who are thanking you, Mark, for your comments and sticking through all the nonsense and noise from the Twitter trolls. So
you should thank the people who piss me off, because that's when you get the really good rants, when someone pisses me off and then I got to really give it to you straight. That's who you should be thanking.
Question from Tom is asking about FCX as a low cheat opportunity.
What's the symbol?
FCX.
FCX
report. And is seeing if it tightens here a little bit better at this $39 area, would this be justifiably on buy alert?
I don't like it. This compressed right side, with the energy group, strong right now, this may just run right up, because a lot of these have done that. But this is clearly one of the laggards, because, we've already got a lot of these stocks that have run up there in new high ground, including the index. If you take a look at the XLE is already, and this is an index, and it's a new high ground. So we're looking at FCX as a laggard. So sometimes laggards can catch up, but I try to stay away from them with a compressed right side in a group that I normally stay away from in the first place, and has already had a big move. Again, with that said, could this take off and move higher? Sure it could. But to me, this is just too compressed on the right side. I'm not going to mess with this myself.
Renee is sharing that she's having her best year ever with us, with you teaching, so keep it up. But also asking about JLL. That was on last week's buy alert list. She's wondering if that is an example of a cap pattern. She took the trade for a quick 9 points on Thursday, got out of it on Friday.
Yeah. I was looking at this, too, and I like the way last week it was tightening up, and then we had this little drift back. I mean, it really is quite perfect. If it didn't break out last week, this would have absolutely been on buy alert this week, and I probably would have been buying it too, just as it started turning up here. Why I didn't buy it on last week on Friday, I don't know. I'm not sure what I was thinking at that time. I can't remember. I was watching. I do discount though. This is another group. These real estate development stocks and the cyclicals, the deep cyclicals. I tend to avoid them. It may not be a good thing. Ultimately, it is for me because over time, I mean, again, Mark, there's some groups, right, that you just haven't done well. And I know we've talked about this a number of times where, I'll go into some of these groups that we just haven't had success in. And you're like, man, I'm not even messing with it. And, I still take shots at them every now and then. But, overall, are there any groups like that you just sort of at least discount and you're not taking big positions in or avoid altogether?
Yes, certainly, like you said, and this would be one. Technically, this looks really good. I mean,
Yes.
it was, and actually, I think she said she's sort of short-term traded. If I was going to even be in a name like this, that's how I would handle it too, because I'm not expecting how explosive it is. I'm trying to remember, is this insurance or real estate? I can't remember exactly what these guys do. Yeah, the insurance is the financials, the real estate. They don't have those explosive earnings capability. That's why historically they don't have the biggest winners, because how much
Yeah.
can you move the needle? On your, what are you doing to the insurance tables if you're
Yeah.
putting triple digit earnings up?
Yeah. The other thing too is just real quick. A lot of times, people say, why didn't you buy this stock or why didn't you put it on? A lot of times it's because it's too spready. That is a reason that I stay away from a lot, believe it or not. Again, if a stock is trading at 270 bid, 272 offer, you think I'm going to go in there and buy 30,000 shares and be at a $60,000 loss right off the hop? Now, if I get it wrong, if they pull the bid down another point or two, I'm down 70, 80, $100,000. No. The reason why I'm rich is because I don't do things like that. That's exactly would be a situation where I would avoid a name. Sometimes that looks perfect, but it's just too spready. Sorry, I interrupted you though.
No, I was done. But to finish up, like I'll trade some of the cyclicals, but like the financials and the insurance, those types of ones, normally I don't. I usually, those are just kind of avoid. And this is a result of looking over my own trades. My
Right.
best winners have shown the exact same work of all the work Mark did, of studying stuff, for the last 100 years.
Yeah.
A majority of my winners were in
too.
those groups. So I did, hundreds and hundreds of trades for my first couple of years. And then I looked back, what did the winners have in common? Most of them came from those groups.
Again, there's something you have to understand. And if you didn't see this recently, I tried to get on some of these cyclicals early back, and we traded a few, had a little bit, little move in GM and a few of these names. But overall, no real money was made. And the stocks, you look back now and they're all up, right? So you say, well, okay, well, see, you should have just held them. No. See, it doesn't matter if the horse goes from one side of the corral to the other. Can you stay on the horse? Can you take that ride without the risk? If you're taking big risks to get to that, and you say, well, you had to go through a 15% stop, well, then eventually that's gonna tank you, because eventually that 15% stop is going to lead to a larger stop, or you're going to have a run of stops and your risk of ruin is too high. See, I've run these numbers not only scientifically and mathematically, but anecdotally through real life experience, through hundreds of thousands of trades, millions of stocks, decades of trading, and decades of unbelievable performance with almost no drawdown. I've done all the work. You're not going to improve upon this. I can tell you right now. It may not look it, and it may be times where, and like I said before, if you don't feel like an idiot, you're not managing risk. You have to feel like an imbecile. If you're not feeling like an idiot, you're not managing risk. It's going to make you feel like you never did this before. It's going to make you feel like this strategy sucks. It doesn't work. I don't know why the hell I'm even doing this. If you're not feeling that way, you're not managing risk. See, these are the things that why it's so hard, because at some point, every strategy is going to convince you that it's broken. It's going to convince you that I can't do this. It's going to convince you that this is too hard. This is not worth it. It's going to convince you. It's going to give you all the reasons that the same person who can't become an Olympic athlete can't do this, because they believe that bullshit. They believe that. They believe the nega toilets. They believe the negativity. They believe that their confidence gets crushed when their rose-colored glasses aren't, or their rose-colored vision doesn't come in the time frame that they think it should. It's going to happen when it should. You're in the exact position you should be. If you've been losing for a year, that's where you're supposed to be, because you wouldn't be there. Trust the universe. Trust God. You're right where you should be. You're at your own timeline, and you're right where you should be. Accept it and learn from it. GDYN. Again, look at this thing. Wonder why I'm stopping out of it. I hope the majority of you, especially, particularly if you've been doing this for any length of time, doesn't have to ask me why I would sell this stock.
I think we're ready to roll out that Minervini Bootcamp product that we talked about, Mark.
Yes. Yep.
James is asking on ISEE, would the reversal action from Friday outside day as well be enough to break the chart for you at this point?
Break the chart? No. Nope. Mark, what do you think about this chart? Because I've been looking at it and thinking, okay, this might be, that duping you get where, you get the outside day. And not only, this is a great question. All right. Great question. So not only if you were in this, it might have stopped you out, right? It's a similar type of look on Friday that maybe this GDYN had, only it held up, pretty well. So now not only can it dupe you out of the trade if you're in it, but it might keep you away from it from getting back into it. So my answer is just like, and I want to know what you're thinking on this too, Mark. Just like before, I'm going to look and say, okay, where are we having trouble here? Well, we see right here. See, it came off right here. Then it came up, it wedged back up, came off again, got a little reversal, tried to tighten up. Didn't get too tight though. This really wasn't that great looking. So it came out a little sloppy, ran right into that same area. So, okay, there's where the sellers are, right? The sellers are right at the high, right at that high, just above that high. So what do we want to see? After everything, I hope you guys, after what I just went through, you know the answer here. We want to see it quiet down. Want to see it quiet. Now, look, if you want to roll the dice here and you're really a cowboy, you can just, if it takes out this high and you get a reversal recovery, yes, you can go into it. I would set my stop at this low right here, because that right now, that outside day, if you go outside of an outside day, that's super, super negative. So, but here's the problem. What's that risk? So if I were to buy it, taking out this high and then let it come down, okay, that's 13, 14%. See, that's too much risk for me. So I'm not going to back into that trade because that's too much risk. So what I would rather see is I would rather get an indication that supply is diminishing here, and I'd rather see it tighten up a bit. And if I can do this and come out of here, now it takes out this high. Now, I probably set my stop now at the low of this pivot. And now give me a little bit better technical stop, and my mathematical stop will be better, or just use a mathematical stop, just come up with an amount. A lot of times I go into a trade and I just say to myself, look, I only want to lose $2,000 here. That's it. That's all I'm willing to risk. I've taken on $3 million trades and said, $5,000. That's it. Right. I got $3 million into the stock and I'm only willing to take sometimes even a couple $1,000. So what I do is I just crimp off the downside and I got this unbelievable upside. If I get it right, I can make a fortune. But if I get it wrong, I'm only going to lose a little bit. Now, the downside to that is you get stopped out a lot. So I know I'm going to take a bunch of those stops. There's a price for that. And so that's why you got to decide. But this is how I would handle this. But what do you think, Mark? Is this something that you're still interested in? Because I know you watch these power plays like a hawk.
Exactly. And that was what you drew is exactly what I'd be looking for. And you can just kind of tell, even if you look at the volume on the daily, some people chase that gap on, was it 2 days ago? And anybody with a type, anybody who's chasing that gap has probably been stopped out if they're a low risk trader. So that's a plus. If it can tighten up now, it improves, in my opinion, because you are, to your point, that there will be, people who will now avoid it because they've tried it once, and been stopped. So, but yes, it's still on my radar. It's on the polls list.
I also like to look at the weekly, so looking at the weekly here, we got a couple tight closes. So again, this is a good size reversal, on the weekly. So it's wedging up a little bit. So it's not my favorite looking setup, but then again, if it tightens up here, it's definitely playable. And I try to give the power plays the benefit of the doubt. I do try to give, I'm trying, just like Mark Ritchie, he's trying to get on a power play. We're trying to give it every benefit of the doubt if we can, but not by going out and taking too much risk. So ESTC is doing so far exactly what we want to see. ESTC, like I said, this should just go. This should just go. It should have when you get this slingshot effect and you get that first pullback, it should just go, especially if sometimes you'll get, a couple, 2, 3 lower lows and you get a little pullback for a couple of days, you get a little natural reaction. This is a natural reaction. So if it's natural, it should come ripping back. You should get tennis ball action. See, so again, somebody might be all bent out of shape. If this turns up here, right? Oh, you're all happy. Everything's going great. Now, all of a sudden it reverses. End of the day reverses, takes out the low down here. Well, that's out instantaneously, get out, right? No questions asked. That's totally abnormal. So, but if you're going to be all upset, oh my God, how do we do that same day? You suck. You bought a stock and you didn't even know. No, I don't know anything. I only know how to apply my rules. I don't know anything about where this stock's going to go. I have no idea where this is going to go. If I did, again, I'd be a multi-billionaire if I could predict. We're dealing with probabilities here.
And I know we're getting about that time, and I apologize, guys, for any, we get through as many questions as we
I
can.
used up most of your question time with ranting, but I think it was worth it.
But you can just hold on to those questions, type them in again next week, and we'll try to get through as many as we can each week. But last question I see here is just with looking at Tesla. He's still holding it, wondering if you would consider this gap action to be
I knew this. I knew this would happen. If I didn't sell it, it would have came crashing in. If I sell it, it's going to blow off. I mean, that's just the way it works. So, but to me, I don't care. I could care less what it does here. But Tesla, I mean, like I said the other day, it's longer term, it looks fine. It's short term extended. Now it's it's getting, it's definitely starting to extend. This may just blow off here. You may get a blow off move. I would sell right into it. And again, I'm not looking to get the next Amazon and, and have Tesla and hold Tesla. These people think it's going up tenfold from here. Maybe it does, but that's not my goal. So, I originally bought it here, got stopped out here, bought it back here, sold it into strength, and I'm out.
Yeah. And
but now you've got the largest day up, and you've got a gap. And if this turns out to be the largest spread, usually this is within 1 to 3 or 4 days of a short to intermediate term top. When you start getting where you get an accelerated rate of advance, you get the largest up day, the largest spread on a gap. Those are all signs that you should be looking to start nailing profits into strength. If not on that day, or start scaling out. You scale out maybe today a little bit. If you get another couple of days, you just scale out. This is where institutions will sell into. This is what people don't understand. Stocks distribute on the way up. Okay, when they're down, that's when everybody's just running for the exits, and it's a mass stampede. But stocks distribute on the way up. If you go and you look, Kathy Wood is a perfect example, because her trades are available. You can go look. She buys everything when it's down and sells everything when it's up. believe it or not, most institutions, that's how they operate. So you might think, well, wow, well, then how come we're not doing that? Because most institutions suck. That's why. Have you seen the performance? 80% can't even outperform the S&P 500. So why would you ever want to trade like that and invest like that? The reason why they do that is because they have to. See, you don't have to. When you own 5 million shares, yes, you got to sell Tesla when it's up and everybody's buying. You got to buy it when it's going down and everybody's selling because you need liquidity. Got it?
Also, Tesla hitting just today $1 trillion market cap value, another big milestone kind of number.
Yeah, I mean, if any stock is obvious, I mean, this has got to be the most obvious name in the market right now. I mean, but again, I don't know. This stock can go up 5-fold from here. I don't know. I'm not trying to play those big giant moves. That's not what I'm doing. I can accomplish that same gain. Obviously, see what I've accomplished with short-term trading this year. In the U.S. Investing Championship, I can get those big moves with small moves and compounding. The thing is that I can also get big returns. I mean, I got big returns early in my career through playing the big moves, but I also had drawdowns, and I also had, you couldn't do it consistently. You could not do that year in and year out because you don't always get these big moves. You don't always get the opportunity. You always get the opportunity for a stock to go up 5, 10, 15%. That happens all year, every year, like clockwork. So there's opportunities in short-term trading if you want to be consistent. For people that are trading for a living, you don't trade for a living trying to play for stocks that go up tenfold.
And the final question, since you did mention this on Twitter, DWAC, any thoughts? Mohammed is asking of what you think of the name.
I mentioned it on Twitter. What did I mention?
Just that I think you have had more non-traders calling you about
yes,
this.
I had everybody's called me on this. All of a sudden, my phone's Bitcoin. That was the big one that everybody called me on. In the 90s, it was Qualcomm, and and the names that were the big movers. Amazon, of course. All these stocks. That's when I know that something is like totally overinflated or something, is when all of a sudden all my friends and relatives that don't trade and haven't talked to me in years call me up about a stock. And this is the one that I've been getting, the phone's been ringing off the hook about. So again, I don't know where this is going. I have no idea. I mean, is there a base there? Is there a pivot? Is there a VCP? No, right? So I'm not going to trade it. You might as well go to Vegas. Just go and put your money on the wheel. Go put your money on the roulette wheel. It'll be the same odds. So I think your odds are 50-50 at best here. And when I say 50-50, I don't mean 50-50. We're 50-50, but we're 50-50 with a 2-to-1 risk reward. This stock could be down 80% or up 500. I don't know. There's no way of knowing. So I'm not going to get involved, with something that doesn't have any technicals for me to make ascertain the risk reward based on the chart.
Yeah, exactly. So with that said, guys, we'll wrap it up here for this week. Thank you, Mark and Mark, for your time and thoughts and comments and sharing as always. And we will have the replay of this available momentarily. Stay tuned to the live stream for the remainder of the week for any course earnings issues and notes, and also any other real-time stock alerts from Mark.
I hope it's been helpful. Take care, guys. See you next time.
All right.